it's a very simple thing. I've been saying it over the course of time that the most important thing in revenue generation is for you to identify the revenue lines that you want to work on. And that is what we've done. We identify the relevant and necessary revenue lines to work on to ensure that we explore them to the fullest, to ensure that they contribute to the coffers of the government. And in addition to that, you also need to, motivate the morale of the staff to actually go out and do this work. So this is what we actually did, and the strategies we put in place have actually, worked out, and it has impacted on the revenue. Some of the revenue lines we looked at are the direct assessment, which is a variant of the PSUN, then the arrears that we pursued, because we worked on arrears, especially those outstanding payments that were not paid by organizations and agencies. One of the studies we had in the past was the finding on the study was that the taxpayer perception is poor in the state. So what we leveraged on was to really work on that taxpayer perception, to really show the taxpayers or the resident of the state that what they contribute to the coffers of government is what is being used for developmental projects. And that has actually worked. We've been engaging with taxpayers, not only through the traditional media, the radio and television. We organize a series of what we call engagement meetings with the taxpayers across the state. We interface with them. We let them know that it is what they pay in form of taxes that the government is using to do a lot of things. So that education is very key. With what we've done in the course of 6 months, I can assure you that taxpayers are well informed now. Even though it's a continuous exercise, we'll continue to engage with them, to educate them, to sensitize them on what they need to do, because it's civic and constitutional responsibility. Well, in the revenue generation, of course, you'll be meeting challenges every now and then, but your own core is to ensure that you overcome those challenges. So, and the challenge has to do with, possibly, as I told you, a taxpayer education is a continuous exercise. You need to, continuously engage with the taxpayers to show them what they need to do, because nobody actually wants to pay taxes, but you need to really talk to them and make them know that it's what they pay that the government is using to do the work. And what is actually working for us, the state government is actually putting the resources into use, because you can see a lot of projects coming up across the state. Road infrastructure, the hospitals are being upgraded, the water system is being upgraded, and the rest. So the taxpayers are seeing it on the ground, so to say. So the executive part of the government is actually living up to expectation, and that is what is actually incentivizing the taxpayers to come forward, register, and make their payments. For the private sector, no, you can't say, maybe on the scale of 1 to 5, you can say 2.5. So we have a lot of work to do to capture the private sector. One thing with capturing the private sector, it's not enough for you to capture everybody, but the efficiency of payment is key. You can capture, but possibly the employers are not really, complying with the relevant tax law, especially the 2011 Personal Income Tax Act as amended. So as you capture them, you have to ensure that the employers are actually, going by the regulations or provisions of the 2011 Personal Income Tax as amended. Efficiency is the key. Well, within the informal sector, we have a taxation regime that is being deployed out there, what they call the presumptive tax. The presumptive tax, because the informal nature of our businesses across not only Nigeria, Africa generally, 70% of our businesses fall within the informal sector, and that these are the movers and pivot of the development within African economies. And that is why in 2015 there was this variant of taxation that was brought about called the presumptive tax. The informal sectors have been categorized into their strength and their weakness, so to say. Here in Kaduna State, it has been domesticated, and we have 3 categories. We have category A, B, and C based on the business industry within which the kind of artisan or the business guy is in. So if you are into vulcanizing business, we have categories of the vulcanizers. You are either in A, B, or C, depending on your strength and the traffic you have of the customers. And if you're into trading, possibly in Shegome market, we also have categorization of those traders. If you are into, say, sale of traditional medicine, we also have categorization of those guys. that. So all the sectors are being categorized and they are being graded according to their strength. That is why they are called presumptive taxpayers, because of the difficulty in assessing the total income they earn within a period. So you rely on possibly the size or what you've seen to assess them. So that not to put a lot of subjectivity, that is why a fixed amount is put in the law for them to be making payments. But with time, we do graduate them from the presumptive regime into normal way of payment and assessment. The tax system is a normal tax system. If you earn your money, you have to pay your personal income taxes. You have to file your returns as an individual. But if it is a company, maybe limited liability company, of course it's not under the purview of the state. It has to go to the federal government. Companies, limited liability companies pay their taxes, that is the corporate taxes, to the federal government. But for individuals and business name, which are enterprises, they fall under the purview of the state and they have to pay. They've been paying some. Well, because the value-added tax goes to the coffers of the federal government, it is an indirect relationship, so to say, because the impact of VAT will come through the federal allocation. We believe that is going to impact so much on the federal allocation that the state receives. An increase from 5% to 7.5% is a good increase. That is about 2.5%. So the states are going to be earning much, provided the business are truthful by declaring what they earn in terms of their turnover and the rest. I think it's for the revenue generating agencies to up their game, especially in training, the staff, the tax audit staff, because they are the major guys that go out there to do the audits. So they need to up their games in terms of intelligence gathering, in terms of the skills the tax audit department requires for them to be able to uncover those window dressing or accounting method that is being applied by these private agencies. It is something that you keep on fighting as a revenue administrator. Because what we need to do, especially with the private sectors, is to keep on engaging with them and to reorient them on this kind of things, because it's not assisting the country in any way. They really have to come out, and declare the income the way it is, so that the government will get their own share of the economic resources. Provided you are a resident of Kaduna, you have to pay in Kaduna. It's a residency rule that we apply. And there is this policy we have in a tax environment, they call it ADBR. Any income that is arrived, derived, received, and brought into Nigeria must be taxed in Nigeria. So that is the trick to it. So once you are a resident of Kaduna State, you have to pay your taxes in Kaduna State. And once the income is derived, is brought in, is received, it accrues in Kaduna State, you pay in Kaduna State. That is the policy, and that is the trick to it. Yeah, I think, as I said initially, it's for the revenue generating agencies to up their game by tracking those kind of income. Because income that come, online, that are received online, hardly these revenue generating agencies, the ones we have now, they hardly track those kind of income. And that is the way to go. That is the, vision we have here, to ensure that those e-commerce businesses, those businesses that go online, which are underground economy, are not really captured in the taxation system. So that is the way to go. And we are looking at it critically. It's an area that you need to study and you need to, bring up a lot of skills and dexterity to deal with them. Only time will tell, because currently we are working on what we call the medium-term and long-term revenue collection plan. We have an idea that possibly in the next 10 years, Kaduna will be doing above 100 billion. That can happen possibly in the next 3 or 5 years, but only time will tell. But we are putting the strategies in place. We are identifying the revenue lines to ensure that we are able to achieve that in the next few years. We have what we call the medium revenue collection plan 2020-2024. We are working on that. We also have the long-term revenue collection plan 2020-2030. So we are not just sitting here and beginning to think of the end of 2020. No. We are also thinking ahead. 2024 is another timeline for us. 2030 is another timeline for us. So we all put in some strategies there we can achieve that. Our target is to ensure that Kaduna State, it does not only cover its recurrent and overhead, but is able to pay or cover its capital expenditure. By the time we get to that, then we can now say, yes, we are there. for 2019, I think we're able to realize 44.9 billion. I think it's about 45 billion, so to say only a few millions out of it, 44.9 billion. That was the collection for 2019, which is over and above what was realized in 2018. So if you take it in relative terms, we're able to collect 105% of the budgeted amount for 2019.